Welcome back. Earlier today, New York manufacturing was reported to have collapsed in three specific components of the report. New York Fed's Empire State Index plunged in January to the lowest level since the pandemic. This is reported by MarketWatch. Today's surprise report is something we're going to discuss. We're also going to talk about why this particular report and to the degree of the decline is so important and a possible effect to the markets. New York Empire State Manufacturing declined to negative 43.7. It's the lowest level since the pandemic of 2020. We're also going to see, in terms of the degree of the decline, it's worse than the 2008 recession. Number two, shipments fell to negative 31.3. Number three, unfilled orders declined to negative 49.4. By the way, negative numbers indicate economic contraction. Positive numbers indicate economic expansion. Now we can see here the general business conditions. That's a headline number, negative 43.7. This is a pretty significant low. Also a significant low. New orders, negative 49.4, and shipments, negative 31.3. Those are the notable declines within this report. Now, in terms of general business conditions, again, negative 43.7, we have to look all the way back to May of 2020 to see a lower low. That was 48.5. Compare 2008 to 2010. That's the left-hand side of the chart. The worst number during the financial crisis of that time was negative 34.3. Today's number again, negative 43.7. So today's number is worse than the worst part of the 2008 financial recession. Now, there are different subsectors within this report. The three most notable declines include general business conditions that we spoke about, shipments, and new orders. In terms of shipments, negative 31.3 today. It is almost as bad as the negative 39 report that we saw in May of 2020, pandemic levels. Also, we have new orders. The new orders number was released at negative 49.4. That is the lowest low going back all the way to pandemic levels of negative 66.3. The reason why we bring this up is because the manufacturing number, especially the Empire State manufacturing number, plays a very significant role within the economy, within the GDP report. It's watched very carefully. This negative number certainly is noticed and will weigh heavily on analyst predictions. Now, this goes back to 2007 through 2009. General business conditions, that's a headline number. The red line represents the S&P 500. Notice the very strong correlation. When general business conditions are strong, so are stocks. When the manufacturing number is weak, so are stocks as well. It's important to mention that because fast forward to present day. Going back to actually 22, we saw strong stocks coincided with strong manufacturing numbers. However, here is the perplexing part. Today's number is certainly very negative and flies in the face of what we understand to be very strong stocks, historically speaking. So, if history is any judge, one of these two has to regress towards the center. Either stocks have to come down or manufacturing has to improve. To sum up, New York Empire manufacturing declines again to 2020 pandemic lows and deeper than the 2008 recession. The largest declines include business conditions, new orders, and shipments. We mentioned this. Think about your own investments. If you have investments that are dependent or correlated to the manufacturing industry, certainly durable goods, I think, would qualify. The production of washing machines and appliances, things of that nature, that certainly could be affected. So the New York manufacturing is a strong historical correlation to stocks. So far, there is a fantastic divergence between the two. It'll be interesting to see which one fills the gap. Later on this week, we have Philly Fed Manufacturing. That is what everyone is waiting for. We want to see if that confirms today's collapse in the Empire State Manufacturing number, or maybe it says that, well, this was a blip down the road and it shouldn't be taken that heavily. As a reminder, if you have not already, please visit our brand new Substack newsletter, our brand new article, The Inverted Bond Market, Where Are We Now? We take an in-depth look at the inverted bond market condition, how it starts, how long it usually lasts, market reaction during the inversion, what stock markets usually do afterwards. It's a very interesting read. You can find that at substack.com. No registration required. Simply go to substack.com and then enter in just the data. We hope this has been helpful. We look forward to seeing you back soon.